All right. Good evening, everyone. Let me try and see if I can unmute some of your. Okay. Let me allow some of you to speak so that. All right. So, okay, everyone now can speak at your choosing. All you need to do is unmute your mic when you have a question. So, good evening, welcome. I'm DF Basy, and this is a Forex Beginners Class Starter 1. All right. So now, theoretically, why someone asked me on my DM why I started the class, why it's free. That normally she knows that forex classes are usually not for free. So I told her the same reason why I'm going to tell you guys is this. Um, Recently, what happened was there is this scam that went on, the CBEX scam. So what I'm trying to do is I felt bad because so many people fell for the scam, and which in plain sight it was shown that it was a pure scam because no private equity, even if a bank wants to trade for you, if you go to Union Bank, Zenith Bank, you go to their board, there's an investment board, most of them, but no, Union Bank, they paste it. Once you enter, they'll tell you, is it 3 point something percent a year? So that is if you're investing 100K with them, for them to give you return of interest, they're giving you 3 point something, some 10% a year, some banks 10%. Please kindly mute your mic. If not, I'll mute you. So some will give you 10%, 3% in a year. And here is someone coming out to tell you that they have a brand, they are CBEX, and they are going to give you 100% every month. So imagine investing 100% of your capital. Imagine investing 100K and you're getting 100%. Tell even if you're doing palm oil business, even if you're doing crude oil business, it doesn't give you that kind of return of interest monthly. It doesn't. That is return of investment. That is set aside your taxes and all. But so many fail for the scam. Why? Because most of them didn't have the basic knowledge about trading, right? So now this is what I had to do. I said, okay, fine. Let me just give her the basic knowledge about trading. And if anyone is willing to advance more than that, you can join the intermediate course. So, all right. So let's dive in. Simply today we are going to go on what's forex. What is the forex market? The forex market is simply an acronym of two words, right? It's an acronym of two words: forex, foreign, and exchange. Please, you have to mute your mic, please. Okay. So it's an acronym of foreign and exchange. That's how you get the forex market from foreign and exchange. The acronym of foreign and exchange. So that's what makes up the forex market. The foreign is an exchange market and is said to be one of the largest markets with a trading volume of $6.6 trillion. So what happens in the market is typically in a market, if you're going to buy things and like let's say you're going to buy pepper and other varieties of items you have in mind, you're actually buying and selling while you're exchanging legal tender for an item. So now in the forex market, what you're doing, you're exchanging currencies for a certain currency. So I'm trading in my USD for euro. I'm trading my euro for USD. I'm trading my um, um, pounds for for say Naira, I'm trading my Naira for JPY, Japanese yen. So in Forex, it's just simply the exchange of different currency in a large market. So now what happens is this market is like, let's, there are different types of markets, and this market require different time sessions. Like they are trading time sessions, just like you have the New York Stock Exchange market, right? The New York Stock Exchange market is trading. They have their own timeline, which you have the New York session, the Tokyo market, right, and all. So now back to the forex. Forex is got to be foreign and exchange. So that's what makes up forex. So practically, how does the forex market work? Okay, I've explained that it operates as a decentralized platform where currencies are traded in pairs, allowing participants to exchange one currency for another. It functions as a 24/7 enabling trades across different time zones, which prices influenced by economic factors and market sentiment. Simply, what that means is this: the forex market is influenced by the economy of a country. So now let's say you are trading. Hope you guys are hearing me. Okay, so now let's say you are trading Euro USD. So now what country uses USD? United States of America, right? So now you're trading the Euro against USD. Okay, let's say you're trading the USD against Naira. So your Nigeria is using Naira and you're trading USD, that is United States currency against Naira, which is Nigerian Naira. So now the economy of Nigerian Naira and the economy of United States of America affects the market of that particular pairs. Those particular pairs, that particular pair, that is the USD and NGN, that is the USD and Naira. The economy of these two countries will affect the market in the sense that will affect your exchange rate, what price you'll be exchanging. Currently, with dollar to a naira, it's 171750, 171750. Black market 18, depending. But I heard it dropped for black market on Bybit and all. So the economy of Nigeria, that's what affects the exchange rate of those both currency pairs. So that's the market now. Exchanging this currency against this currency is you coming to the market. It's just like when you go to the market to buy pepper. Now you're going to exchange your naira or you're going to exchange your dollars for pepper, right? That is you. So now it's same applicable. The same is applicable with is applicable with forex markets, right? You are literally exchanging. You're exchanging a currency with another currency. So now the advantages of forex is high liquidity allows for quick transactions and minimal price manipulation. 24-hour market enables at any time accommodating various schedules, leveraging options. Now, the advantages of market is as you're trading the forex market, you are liable to trade 24/7, except the forex market doesn't open on Saturdays and Sundays, but it trades on weekdays, which is Monday to Friday, right? The exchange happens from Monday to Friday, but it doesn't happen on weekends. So you trade on weekdays, not weekends, right? So you have high liquidity in the market, and you're as a trader, as a forex trader, you are your own boss. Why? Because what you just need is your system, your internet connection, and your chart, your trading portfolio to trade, and your skill. That's all you need. That's all you need. So now disadvantages of forex: it's highly volatile and can lead to significant loss quickly. Leverage also increases risks potentially. Leveraging in the sense that when you're trading a certain amount, let's say you're trading $100, and you I'm sorry, I don't know if you guys are following me, but I'm reading from the PDF, I'm literally explaining what the PDF I gave you. Everything is self-explanatory, but I'm just breaking in each class. I'm breaking down everything, every topic concerning the PDF given. Right. So now I'm on the disadvantages of forex. Leveraging also increases risks, potentially leading to substantial financial losses. Substantial financial losses in the sense that you will lose money trading and over leveraging. The over leveraging is the sense that, let's say you're trading $100 account. So let's say you want to risk 1% of the account. 1% of that account, I think that's a dollar, right? Then risking 1% of that account will enable you trade the account profitably in the sense that your losses will be minimal if you're risking 1% per trade. But let's imagine someone that's over leveraging, that's now is now risking 40% of their account. So that's 40% of their account, you're trading $40 per trade. So imagine taking two trades and you lose instantly on those two trades. How much is gone? $80. At that instance, you have lost your money. What's left with you is $20. Do you understand? So over leveraging and increasing risks can lead to substantial financial loss in forex. And forex requires deep understanding of the market dynamics and economic factors. I say something like that. Economic factors. You need to understand the economic factors of each currency pair that you need to understand the economic factors of each country that is pegged to a currency pair, like the naira to Nigeria, the USD to United States, right? All right. So now let me go to the criticisms of forex trading. This the criticism is more like the let me say the characteristics, or let's say the hearsay of forex. What people criticize about forex. Why? Because you have, let's say, like, okay, let me read this one. Forex faces criticism for high risks and volatility, yeah, often leading to significant financial losses. The market complexity can overwhelm beginners. So as a beginner trader, you need to undergo certain training, you need to understand certain things about the market dynamics. You need to learn, you need to practice, and you need to understand every part of market structure and all those parts of trading, right? You need to understand, firstly, let's not go too far. First off, as a trader, you need to understand, okay, if I'm exchanging the USD against Euro, I should know the economic factors driving USD at this time, and you should know the economic factors driving Euro at this time, right? In order to give you a good head. Just like, let's say, the Ukraine war that's going on. If I was to be trading the Ukraine currency against USD, right? I'll know, okay, the Ukraine currency will be weaker and USD will be stronger, right? So at that point, I would have been selling off my Ukraine currency to USD. It's applicable vice versa if USD was weak. So applications and usefulness of forex trading. Forex trading also involves a business to exchange currencies for international trade and investment. It provides liquidity and price discovery, facilitating efficient currency conversion. Now, is it safe to trade the forex market? Yes, it's safe to trade the forex market, but trading in the forex market carries inherent risks due to its volatility and leverage. Why do they say volatility? The market is very volatile. Volatile in the sense that now in the US, they don't allow people to trade more than $1,000. It's only here in Nigeria that brokers regulate. Let me check if you guys are still with me. All right, you guys are still with me. So it's only here in Nigeria that brokers, right, regulate their capacity to allow, they regulate and create a leverage that allows Nigerians to trade with $100. In US, they don't allow you to trade with 100. If you open an account and you say you want to trade with $100, you can't trade with $100. Why? because the market is volatile and it needs you to have a capital of at least 1,000. 1,000 is just them saying, okay, I want to deposit $10 to steady waters. So in the US, what the brokers they allow you to trade from $10,000 and above. But only here in Nigeria that we have brokers that can give us the leverage to even trade $5, $10, right? So now that's very volatile. The market is very volatile. What moves the market, the forex market, is we have the institutional traders. That's where you have the banks, your hedge fund, CBN trades, right? The CBN, Central Bank of Nigeria, trades forex. Your Zenith Bank trades forex. Your Union Bank trades forex. Your what do you call them? Your Global Bank, your um Fidelity, your Access, should be Diamond Access now. Your First Bank, they trade your forex, the forex market. When you open a fixed deposit account, when you open a fixed deposit account with um all these banks, what do you expect they use your money to do? Kuda Bank, Opay, all those fixed deposits, it's your money they transfer to traders. In the headquarters of Zenith Bank, they have a floor where their traders trade fixed capitals. They trade and they make profits. Though they won't let you know. But if, and they mostly don't let people into that room, right? Because someone I know, the man said at that time when he was young, when he went to Zenith Bank, he went to a floor and they were trading. He didn't know that that was Forex that they were trading. So when he went in, he thought that this was where like a customer service where they would attend to him because at that time his mom took loan from the bank and he's trying to reset. So they're like, you know, these people where they collect loan, they are marketing, those marketing teams, they're always upstairs. So he went there thinking that that was there, but that was the place, their office, but it wasn't. So someone just pulled him out. So he was asking them, what were they doing there? They didn't answer him. Little did he know that they were trading forex. So your banks, they trade forex. So now, why they say the market is very volatile is those people, right? They are pushing. Okay, let me say for instance now in crypto. Now some people will say Bitcoin is rising, Bitcoin is falling. What happens in the market, even in the forex market, is demand and supply. Forex is simple economics. Let's come back to our economics. Forex is simple demand and supply, right? So if there is demand for a particular item, particular stock, a particular crypto coin, meme coin, or currency against another currency, if there's a demand of that currency, the price will rise. So just like the there's demand for dollar against naira. So the price of yeah, the price of the dollar, the demand for dollar against naira, the demand is rising. So now, a dollar to naira is 171, 750, right? So forex is common, is simply demand and supply. Same with crypto. Why is Bitcoin rising? People are buying Bitcoin. So they buy, as they are buying, the price is skyrocketing. So now once people start selling off their crypto, right, there's too much supply and everybody's selling off. There's enough supply in circulation, right? That's what's also happening to Nigeria today. There's also too much supply of Naira, but Naira no one for. You understand? The price doesn't want to fall. There's too much circulation. One of the things that's happening US economy is, though the US economy is very, very undervalued, but one of the things that's helping them is they regulate their the circulation of their dollars, right? There's what they do. After is it 4 5 years, they tell all their citizens to bring their dollars and they will print a new set of dollars, right? And in US, they mostly operate cashless. Like you rarely see someone with $100 bill. Rarely, rarely see them except they go to the bank and request for it. And there's some banks you request for it, they'll tell you to come a certain time so that's telling you that that $100 bill is not always accessible, easily accessible. But here we have 1,000 naira that's easily accessible. And there was a time that our government were trying to create $5,000 notes. So imagine creating $5,000 notes like you holding that is the value of the currency will just drop. We no go get anything again. value of, imagine they created that 5,000 naira, our economy would have been scattered. But at least thank God for God, they didn't create it, and we are still even managing with the errors that some past governments had already done, right? So going back to the volatility of the market, now going back to what I was talking about, what happened in the bank, the guy went to the bank and he saw people trading the forex market. So now they're trading your fixed current, your the money where you open. You said you went to bank, you opened a fixed deposit account, and that money is growing. They're using that your money for bank, your Union Bank, your Access Bank. They're using that your money to trade the forex market. So now they're trading with a volume. They're trading capital now. They can be trading with each trader can be trading like with a 500 million naira account. The other one can be trading with 600, 8 million. Join all of them together. They could be trading with, let's say, five to $500 million, right? So now the hedge funds do the same thing. Hedge funds are like, now let me explain what hedge funds are. Hedge funds are companies, like institutions, right? Opened before you open a hedge fund, you have to go to different licensing to open a hedge fund company. So now hedge fund companies are companies that are opened, right, for investments. Now they collect big investors their money to trade. Like you have people like George Soros, this other guy, I forgot his name. They collect their money, right? They trade for them. So if let's say someone like Elon Musk wants to invest, he doesn't carry his money to, like, let me say, an average trader, retail traders like us, to trade for him. He will take his money to a hedge fund company which will trade the forex market for him. So he might give them, let's say, $50 million, $700 million, and all. Like Apple, they trade. There's no company, even X has stocks. Tesla has stocks. So there's no company that doesn't trade. So they don't give that money to individuals. They give that money to hedge funds. So now those hedge funds using that bulk capital to trade gives them an edge over us. Because now you can trade that your $100 and the next thing, blink of an eye, it's gone. Huge volume. So now going back to demand and supply, if let's say now, let me make it clear now. Let's say if okay, let me open chat so that everybody can see what I'm trying to talk about. Okay. Are you guys there? Okay. Let me go to BTC. Alright. Are you guys hearing me? Please can someone just
Yes,
let me unmute.
yes,
Okay.
yes.
Alright. Let me unmute those that just joined. Okay. So now let's say this is the Bitcoin chart now. Alright. Now Bitcoin was at 70. Let me draw this. Let me pick this. Now Bitcoin was here, right? Bitcoin was here. It was at the price of $76,000 for one Bitcoin per Bitcoin. So now all of a sudden, this is where Bitcoin is. This is where Bitcoin is, right? So now what moved the price of Bitcoin from here over here is the demand. Certain people started buying from here when price got to this place. Certain people started buying, right? So that mute your mic. Okay. All right. Sorry, I've muted the person. Some certain people started buying from here, right? From this point, and they bought. So now demand. Once there's demand of a particular currency or crypto or whatever stock, the price goes up. So demand and supply. So it buys. So people are urging for more. People are buying. The price keeps going. Just like, let's say, what happened with Pi. I don't know if you guys are aware of Pi at that time, when before were listed or before they opened the exchange, whatever they did, people were buying and they demand, and some they started selling it for 1.5 per pie. It increased to 1.8, it increased to 2,000, increased to 2.5. So same thing here, the demand pushes the price up, right? Let's say let's go over here. Same thing happened here. Same thing happened here. The demand for Bitcoin push price up to this place, up to 100 and 100, yeah, $108,000 for per Bitcoin, right? But when you reach this point, there was enough circulation, too many circulation. The supply was too much. So some people started selling off, right? Started selling, so it reached a supply zone. So from here, people started selling off. People that had huge. So now, what I was trying to explain is huge volume pushes the market. So now you can see this. Let me zoom in. Okay. Now you can see this huge pool here, this huge pool here, and this huge pool here. Buy volume. This volume showed that aggressive people started buying, like people with huge money, bulk money. Let's say people will get like 500 trillion, they started to the pump, plus the retail traders will get $100, $2,000, and the rest. They started buying. It pump, the huge volume they pump, they push the market. Imagine just like if as this market did like this here. Let me go to current chart. This market did here like this. Our market is currently here. Bitcoin is here, right? If someone wakes up with, let's say, $1 trillion and buy Bitcoin, the next thing you see this market go like this. Go just the pump, they go up. Demand and supply. So now those that have high how would I put it? High portfolio, huge portfolio, tend to move the market easier. Why? Because their portfolio, their big fat portfolio pushes the market somehow in a way. So now that's why when you're trading, you have to follow the institutions, the hedge funds. So those guys where they trade with $500 million account and all, once they enter the market, let's say they start buying, you see this 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 is a type of chart. I'll explain what type of chart it is later on. It's part of the course. You see the PDF types of charts on the beginner. This I dropped something like that. I think yeah, it's there. So you see this is a type of chart, this is a candlestick chart, but this is not why we're here today. I'm just trying to explain the fundamentals of Forex, what Forex is and all. So now the demand for Bitcoin here is what pushed the price up here. Is what push the price up here. So now when there's too much supply, the price came down. That's simply Forex for you. Trading demand and supply back to your economics. So now the hedge fund traders, right? They have huge funds. So now if let's say someone was holding a position on this Bitcoin and he said, okay, Bitcoin was going to sell from here down, right? Bitcoin was going to sell from here down. And he took a sell position from here. Let me add something. Took a sell from here, expecting that. All right, he took a sell from here, expecting that price will hold on. Expecting that price will from here go down, right? Now, mostly since they have huge funds, they take a sell. Even if the trade goes against them, they don't care, right? Because they have huge funds. So now, most times they might be stacking up positions as the market is dropping. That's how most of them trade. Or most times, like now, they can let's say um they will exchange let's say $500 million to Bitcoin. Okay, no, they exchange $500 million worth of Bitcoin to USD to sell just to sell the market. Do you understand? just to sell the market, and the market doesn't go their direction, they have the capital to still hold the trade. But in a sense, where we say you as you're trading with $100 and you're trading with $1,000, you don't have that capital to hold market up to this zone, to this level. That's why you have to start finding strategies. You don't really trade the simple supply and demand, though you still add the supply and demand, but you have to find other strategies to fine tune yourself with accommodate your $100. Whereas now, as the big markets now, if they want to buy Bitcoin, let's say, now let's do this vice versa. If per se they wanted to take a buy position on Bitcoin, right? They want to took a buy position from it. Then let's say they're buying, so they will exchange the USD to Bitcoin. Let's say they exchange a huge volume, like let's say they exchange like 500 million to Bitcoin. That's when you see this huge volume. You see this kind of huge volume candles here, from here to here. Aggressive buyers show you that huge volume was exchanged here. Huge volume was exchanged here. So now that tends to show that they have a bigger edge because they have bigger capital, larger capital in the market. So now it's volatile in the sense that you will hold out your small $100 for this place. If to say you will not trade in that direction, your money don't go. Go to law. You cannot find it. It is gone. The money from here to here, you don't phew, it's gone. Nobody can help you. So now let's go back to what was to from here. Is it safe? Is the forex market safe or not? It's safe if you understand your chances of risks, if you understand how volatile the market is, you understand your strategy, you know what you're doing, you know how to analyze the market, you know the economic factors that drive the currency pairs that you're trading. All right. Okay. So moving forward, can one trade can one make money from trading in the forex market? Yes, very possible. We have profitable traders, we have non-profitable traders, we have the ones that are losing money every day. It's possible to make money. It says that if you can analyze, like one, you're analyzing currency pairs and market trends, utilizing effective risk management strategies. Utilizing effective management strategies, like I said, when you're trading, there's someone that will be risking 1% of his account on each trade. Let's say now, if he risks 1% of his account, that's let's say $1 per trade, and he loses 10 trades. What has he lost? He has lost only from that his $100. But you will go the risk management doesn't make you profitable if your strategy is not good, but it will help you be profitable, right? Your money no go, you no go fast, but hello to try to get it today. They want to show us that they are still glow. Nigerian network. All right. So back to what I was saying. Um, can one make money from the market? Yes, you can make money from the market with utilizing risk management and also implementing technical and fundamental analysis. So now, what is technical analysis? Technical and fundamental analysis. What is technical analysis? Technical analysis is please, are you guys still hearing me? Let me know. So
Your voice is like kind of breaking.
Are you guys there with me? Hello. Please.
Your voice is really
It.
crackling.
Yeah.
Okay, sorry. I don't know. Network is. Let me switch over to MTN if their network will be better off. So just hold on. Give me like 5 minutes.
Why do I feel like Mr. Arya's here in this office? Why does my heart feel Mr. Arya's
Can you guys hear me? I'm very sorry.
Yes, I can.
Nigerian Wahala network. So, mm, okay. So we were technical and fundamental analysis. Technical analysis, TA fundamental drive and dropped. There is technical and fundamental analysis, right? Do your analysis on the chart. Then on the chart, this is the chart. This is the chart, right? While FA fundamental analysis is doing your analysis on
I
the
think we are not
background
seeing
of
the
the
chat so well.
economy and economic factors driving a.
I'm not seeing the screen because it's like
You
particular
say
thing is I'm not seeing the screen. for the technical analysis.
Yeah.
You're not seeing the screen.
Yeah.
Yeah, I'm not seeing the screen for the technical analysis.
You're not seeing what? Hear me?
I'm not seeing the screen for the technical analysis that you're trying to show.
Can you see the screen now?
The screen is
No.
actually low.
The screen is blur.
Yeah.
Okay.
From my end, it's not just showing from my end.
Okay. Can you see my screen now? Can you see my screen now?
Yeah. You can. I can see
Can
it
see
now.
now.
Okay. Okay, you can see my screen now.
Yeah.
Okay, this is where you do your technical analysis and then analyzing the chart, right? You analyze the if it's a currency pair or if it's crypto. I don't know why this is here. Are you with me? You do analysis here, then that's for TA, that's technical analysis. Doing your analysis on the chart, while fundamental analysis is simply doing your economical and background check of a currency pair that you're trading. Currency, crypto, stock, bonds, equities, wherever you're trading. Right, for me, I trade the Forex market. The crypto, I only analyze Bitcoin, right? I only analyze Bitcoin and Shiba, Shiba Inu and which other coin again? Shiba, I don't know Shiba and um Avax. Those are the only coins I do analysis on, right? Because I'm looking at going long on them for the long run. So that's that for that. So I was explaining TA. Let me go back to the material. Explaining TA and fundamental, technical analysis and fundamental analysis. TA, technical analysis, just doing your technical analysis, your chart analysis of the economical background of the. Okay, so now how can one trade the forex market? Trading the forex market, you need to choose a reliable broker. Now, what's a broker? A broker is a how will I put it? A broker is an agency, is an agency that gives you access to trade the financial market. So now let's say, okay, let me use the broker as your bank, your Access Bank, your Union Bank, right? They give you access to buy things in the market. Okay, CBN is your broker. They give you access to buy things in the market. They give you access to Naira. They give you Naira. Same as your bank gives you Naira. You can withdraw your Naira from your bank. You can use your bank to do transactions to transfer. So your broker, you as an individual, a citizen, cannot just go and trade the forex market. To digitally trade the forex market, you need the broker to give you access. So you put your money inside the broker and upload your broker account on MT5, Meta 5 or Meta 4. That's an app where you can access the market, where they trade the market. So your broker gives you access to the market, whereby that your $100, they'll give you a leverage. A leverage of 1 is to 100, 1 is to 500, 1 is to 5,000, depending on the broker. I will explain leverage later on. There's a PDF material explaining leverage. I'll do justice to that. It will give you leverage where you can trade the market, right? Then analyze the market, use technical and fundamental analysis, identify opportunities. I explained this using technical and fundamental. Technical is on the chart, fundamental is you doing the background research about the economic factors that affect the currency of the country, right? Then number three, develop a trading plan. Set clear entry and exit with risk management strategies. You develop a trading plan. A trading plan is simply your your trading plan is part of your risk management. It involves your risk management, the time you're going to be trading, what time frame you're going to be trading, when you're going to be trading, and if you're trading, what you want to be trading. That engulfs your trading plan, right? Then we're talking about execute and monitor your trades, right? Now that's the last thing. You execute and monitor your trade. Place trade based on your analysis and adjust as needed while adhering to your plan. As traders, what you should do while trading is focus on your trading plan. If your trading plan is not effective enough, try and rebuild it and rebrand it. Try and meet other traders that are profitable to help you go through your trading plan and help you find flaws. Remember your trading plan, if you're trading, your trading plan reflects you. If you're trading the forex market reflects you. In the sense that if you're a greedy person, once you start trading forex, your greed will start to show. If you're a stingy person, you go start to the show. If you're someone that thinks a lot, you dey over fear or you too dey fear. When you start trading, you go show. You'll be scared of taking position or taking trades. You be thinking a lot. It's position where you take now, you go dey think, whether if I go lose money, if I go make profit, if I go do this. You just dey think, you just dey beat yourself up. All those things come to play. Forex amplifies you, shows the real you, brings out you. So yourself, you're pouring out yourself on the chart to make money. So that's why the discipline comes in. Forex will discipline you, make you patient. If you're someone that doesn't be patient, make you patient. It will those fear. That's why you say if you come across Twitter or TikTok, you see this popular post where they tell you um, you want to break a forex trader's heart where this app, certain apps have broken his heart already. Do you understand that it's not hard to break? Though in some way it's true, in some way it doesn't. Forex, you cannot hide your emotions. Everybody, we are all humans. But the thing is, you can control your emotions. So the level of control you have, a forex trader has, is different from that of a human. Imagine, let's say, like John Soros. He said he took a bet and lost over $600 million. Imagine losing $600 million and you're still saying the man is still saying he says something that like he's okay. Do you get it? So imagine you taking what do you want to take from that kind of human being that will make him run mad? What exactly you want to do to him? So the level of control you have is totally insane as a fact. You get stronger every day because I exercise it. The stronger I get, the more money I can make. Just like a quote of mine. Your brain gets stronger every day because you exercise it. You read, you want to know more. If you're someone that after this class you just cover the PDF and keep till next class is on you're on your own or you're if you're someone that you exercise your brain, you reread, you check, you try to understand every sub heading, every topic, subtopic that's been dropped, every course on the PDF, every topic, try to understand, read on your own before the class even starts. Your brain will get stronger and you can make money. The forex is just having the knowledge. If you can have the knowledge, you can make money. You have the knowledge, you build your skill. With time, you make money. Simple. That's just it. With time, develop your skill, have the knowledge, and you're set. Alright, so that's that for that as far as that is concerned. So I've explained the definition of forex. I went through everything on the PDF. The PDF is self-explanatory. I just want to so each class I'll be explaining everything on the PDF, explaining the topic itself and showing you, if need be, showing you the chart illustrations of what they are. Okay. So do I have any questions? Our time is almost up. You can unmute yourself and ask questions if you have any to be asked. Is there any question? Can you guys hear me? All right. So since there's no question, is there any question? Okay. So I think there's no question. So if you have questions, you can write me on WhatsApp. You can DM me on WhatsApp. I'll answer them. Or you can write me on WhatsApp. I'll answer them. You can still write me here on Telegram. I'll still answer them. Then the live class has been recorded and it will be sent to those that were active on the class and those that joined the class and those that, yeah, I only send the live recordings to those that joined the class because those that joined the class I feel the way. Those that are the ones that are serious, right? At least if you join the class, even if network log you out, I'll see it and I'll send the live recording to you. So, all right, take care, everyone. See you tomorrow in the next class. All right, send your questions to my DM. All right, good night.